Good afternoon, everyone. It's Friday, the 20th of July, 2012, and this is Brian Shannon from AlphaTrends.net speaking. We had another wild week here. When it was all said and done, the S&P 500 gained 0.5%, the NASDAQ a little more than 1%, Russell 2000 back below that $80 level, so that's not good to see. And the financials recovered a little. I'm sorry, the semiconductors recovered a little bit, but financials were off. So really, just kind of choppy back and forth trading. No real conviction, but we do have, when we look at the daily time frame of the S&P 500, we do still have this channel, this uptrend channel that we're in, and we are above a 10, 20, and 50-day moving average. It wouldn't be surprising to see it pull back down to 135, even down towards that 50-day moving average at 133.5 again. So yesterday and the day before, we were talking about innocent till proven guilty. That's what I was writing on my blog on a couple of charts, and that was the case, I said, until we had this pattern of higher highs and higher lows interrupted. Well, on the open today, we did have that pattern interrupted. The market gapped down and sold off, somewhat steadily, but boring session here today. Down, closing right near the lows, and I don't know what happened there, but below the volume weighted average price. But really, we just had two little ranges in here throughout the session. But right on that 5-day moving average, we're not collapsing here. It doesn't look like, and this 35 to 36 level, there's been some pretty good volume in there, so perhaps that's going to provide a little bit of support. We're back, when we talk about this channel that we've been in, we can see that this is basically the midpoint of that. This here, 136 was the level we were talking about earlier in the week. That it was good to see that it got back above 136, and that we wanted to see it hold above that rising 5-day moving average, which it did. And now we're back to I'd say more of a cautionary stance, because we've interrupted that pattern of higher highs and higher lows, and perhaps we're going to see another pullback like this, or we could correct sideways through time. Either way, it's next week is really when the earnings begin to flow, and this week we had some high profile. CMG was a high profile disaster today. This one gapped lower and continued to sell off in the first 20 minutes, 30 minutes of the day. It did recover somewhat, but still just an awful day for a stock that's been really defying gravity over the years. Eventually it's going to settle in and maybe become a good buy again, but a lot of times the stocks that gap down like this really need some time to recover. ISRG was it's another big name, down maybe at some support, but we need some time for these things to settle in. This one's right down at its 200-day moving average. We saw crazy action in Vivus this week after they got some approvals, and if you look at the intraday action, it just shows you how nutty it can be to trade these biotechs, in particular around news. Now, IBM had a good response. I don't want to just pick on the losers, but we do still have a declining 50-day moving average in there. So I think that this stock's probably neutral at best for a while. It needs to consolidate a bit. Google was up 17 today, and still really kind of range bound in here. So just not a lot of exciting setups out there. And some of the stocks that have been getting hit hard on earnings, continue to just get slammed, even though they're down big from earlier levels. So don't be looking for the bargains on these earnings, like Lexmark, on Mako, on Mako Surgical, which was a big momentum name last year, and Rovi. This one had a horrible week. I mean, it bounced a little bit the last couple days, but it's been in this awful downtrend. And really, that's the big risk next week, as we continue to see a lot of earnings reports. And by the way, this is each Friday. This video is brought to you on YouTube from Realtick. Realtick is the trading platform and analysis tool. I say this every week, but it's amazing that I still get questions. I got an email today from someone asking me, what platform do I use? It's Realtick. That's what these charts are. That's where I execute trades, and I think it's the best platform out there. I've been using it for close to a decade. The NASDAQ still has this pattern of higher highs and higher lows as well. Last week we saw that 62 level did hold. We've got a 10, 20, and 50-day moving average. They're kind of flat to turning higher in here, and the weekly time frames And we're still stuck, you could say, below this prior support in here and trying to work away at that. And we can see that, here on the daily time frame as well. So, this market's been making some good steady progress here. The question is, on the weekly time frame, is this just a bearish flag and we're going to get hit hard from here? Now, that hasn't been the case, obviously, in a while. This is the best example of, a potential bearish flag. We had a potential bearish flag here that, broke back to the upside. So, again, with all technical analysis and indicators, it's something that gives us an idea of what the potentials for the market are, and then we have to gauge where, how much risk to take relative to what we perceive the reward is, and what kind of overall environment we're in. And the environment we're in, unfortunately, continues to be one of uncertainty. When we look at the different time frames and we're getting mixed messages, it tells us there's a lot of uncertainty, and we can see that with the earnings reports. I mean, some of them are up real big, and some of them are down 10, 15% on big names. The NASDAQ did hold above that level that we wanted to see it hold this week, which is about $63.70. So next week, maybe if we come down to there, perhaps it holds. But we've got, again, we've got the higher highs, we've got these higher lows, and we've got some important levels below, 61.80. This has been a prior band of resistance and support down near that 63, 63 and a quarter. So if we got down to that area, that's also where we can see now we have that 50-day moving average. So I don't see the 50-day moving average as getting down to it as being necessarily really bearish, and I don't really see the trend. If you call this a trend line, I think breaking below the real damage would be done to this market below 61 and a half. That is, if it was to stay below there. And it's kind of surprising earlier in the week that the NASDAQ did hold up as well as it had been, as the semiconductors had made a new low for the year, and then real strong reversal. Don't forget that these strong reversals are not uncommon in downtrends, and we got right up to, for the third time, a declining 50-day moving average. Best case is that this stock is going to go sideways for a little bit, maybe between $30.50 to $30.80. This is the prior band of support that became resistance in here, and we've got the 5-day moving average. If we get back below and stay below for, let's say, more than a half hour to an hour, back below 30.5 next week, then these semiconductors could, break down out of what is, looking like a head and shoulders pattern. So again, it's just really uncertain depending on what time frame you look at, and I think that that lends the logic to shorter term time frames are better in this environment. We had so we've got this basically $30.40 to $30 and let's call it 80 cents as a potential area for support. We break back below that though, and these semiconductors could get more troubling. The best case scenario in here is that these are turning more neutral. I think though that with the declining 50-day moving average, they're still guilty till proven innocent. The Russell 2000, this is on the daily time frame. This has been an important area that it's just fallen back into, which is basically 78.5 up to 79. This has been where we've seen this band of prior support in here turn into this band of resistance, then kind of fought it in here. We've also got this trend line that's coming up in that area. So this 78.5 early next week is going to be an important level. We're probably, we break that, then we're definitely going to test this. The question is, will it lead to a bigger decline down to close these gaps and to test the 50-day moving average? And that 50-day moving average is down here at about 77.5. One scenario I think is kind of likely is that we could break this trend line, because this trend line is pretty obvious and it's been getting a lot of press. So a lot of people feel that breaking a trend line means that the trend has reversed. But I think that if we broke the trend line and then came down to 78, 77, 80, somewhere in there, and found some support, then it would trap a lot of shorts that break that trend line. And don't forget, again, we've got that 50-day moving average down here at this $77.70 level. So unfortunately, I hope I'm not sounding wishy-washy here, but the message of the market is really wishy-washy, and I think my interpretation of that is clear. Again, what it tells us is it's time to be cautious. A lot of people probably shouldn't be trading in this environment. Next week, we're going to have a lot of earnings reports that get released, and that's really going to be important as always for the individual stocks that you're trading, the financials. We saw Bank of America get hit pretty hard this week as it broke down through some support. Yet the financials are still kind of holding their support level. We've got a similar type of trend line, and why not draw the trend line off of here, you might ask? And then the answer is you could, but you want to hit on as many points as possible when you draw a trend line, and this represents to me what I think is the essence of the trend. If you look, it also kind of lines up with that 50-day moving average in this prior little resistance area at resistance here, and then support here at about 14 and a quarter. So 14 and a quarter looks important. We get below there and stay below there for a while, we could see another leg lower. Obviously, this 1495-ish seems insurpassable for now, at least. And going back to the 30-minute time frame, here's our little band of support that we want to see hold next week, which gets us down to about 14 and a quarter. Again, it's about areas, not a straight line across. It doesn't mean 1495 precisely. Sometimes we get a little shake below a level and then movement in the other direction. So be aware of that. Be nimble, be aware of when your companies that you're trading are reporting earnings, and play a strong defense, because you really need one to get through this type of environment, so that when conditions become easier and more conducive to trading, for more than just a couple days, that you'll have your account ready to take advantage of any emerging trend that's there to last. Thanks for tuning in, and have a great weekend.